Maya, thank you so much for joining us this morning. This is a very important conversation as we go deeper into lockdown and South Africans start looking at how they really are going to pay those, especially those big bills at the end of the month, specifically the bills that keep a roof over your head. Now, there was a video that you posted on social media earlier this week that really went viral, and that's because not enough people are speaking about credit life insurance. And now, we believe that many of these loans have that as part of their fine print. Why do you believe that we're not hearing from financial institutions about these options for South Africans?
You know, I can't comment on why there was a glaring silence about credit insurance, because from a credit provider's perspective, it's a shared responsibility with an insurer. So they're not taking the full pain. It's actually the insurance companies that underwrote that in credit insurance. But I can tell you the good news is that since my video went viral, that has all changed. There is massive communication from the banks, from credit providers, people, even from your store cards. People don't even realize they have something called balance protection on their store cards, for example, that they've been paying for and that they could possibly claim against. So I think what we need to just clarify, though, is that credit insurance tends to be quite prolific with shorter-term loans. So especially banks like Capitec, African Bank, you'll find that people probably have credit insurance. When it comes to your mortgage or your vehicle finance, often it had to be something you had to opt into. It had to be a choice. And in those cases, as you know, most people, when they're trying to cut costs or they see another insurance, think, oh, I don't need that, I'll never need that, and they didn't opt in. So some people may have it, but it's not probably as prevalent as it would be on some of your shorter-term contracts like your credit cards or your personal loans.
Now let's talk about T's and C's. Why do you think people shouldn't be so quick to take up what sounds great on paper? I mean, who doesn't like something that's called a payment holiday?
Yeah, I use the analogy that when you go on holiday, as much as it's lovely, you still pay for it, remember? Holidays aren't free either. So that's exactly how you need to look at your this payment holiday offered by the banks. So the T's and C's are quite clear here. You can only get it if you're in good standing. And that's very important, because this is not meant for people who were already struggling and falling behind and had other issues. This is specifically a COVID-19 relief measure. So it's only if you really suddenly, because of COVID-19, cannot meet your installment at the end of April, because that's probably when it'll start impacting those people who've lost their jobs. So I think from the 1st of April till the end of July, you get this payment holiday. But it doesn't mean it's an interest-free holiday, and that's what's very important. Actually, it will be added, any interest payments due are actually added to the value of the loan. So at the end of the 3 months, if you haven't paid off, your loan value will actually be higher. So this is not something that you want to rush into just thinking, oh great, I don't have to pay my bills for 3 months. It is literally, I have not been paid, I have no money, I'm going to take this option. But of course, then I also encourage you to find out if Credit Life covers that, and maybe you want to cover a little bit the T's and C's of Credit Life, because that's another whole story together as well.
Well, let's talk about that a little bit. This Credit Life insurance, now that everybody is talking about, who would qualify for that within current circumstances pertaining to COVID-19?
So the different credit providers had different types of cover. So it's quite important to understand who your credit provider is and what that insurance provided. So for example, with Capitec and African Bank, they had quite a good cover in the sense of something called loss of income. And this is where all of these claims, so say for example, you're not being paid, you still have a job. All credit insurance pays out if you are retrenched across the board, no matter who you have it with. If you are retrenched, or Credit Life will kick in, and it will pay your debt repayments for 12 months or until you find a job, whichever is shorter. So that's extremely important. If you're facing retrenchment, find out if you have credit insurance. If your employer has just stopped paying you for a couple of weeks, then that's loss of income. So for example, Capitec and African Bank will look at partial loss of income. So maybe even if you just had a pay cut, you could possibly still claim from their credit insurance. The banks are saying you need to have a full month of no payment. So it would have to be a calendar month of not receiving your income, and then your credit insurance would actually kick in and pay your debt installment. And that's why it's so incredibly important to check if you have it, because your debt installment could actually be covered by that insurance.
Now, there's lots of bad news coming our way in terms of the economy. It's going to be more expensive to lend and borrow money. Your advice to people who don't know really what to expect from an economic point of view, perhaps they are still permanently employed, things are still okay for now. your advice as to what they should be doing just to shore things up and ensure that they feel a little bit more secure financially over the coming months?
I think it's, we mustn't forget that there are many, many, many people still receiving a salary. So those people especially need to use this time to do two things. My first appeal to them is to still pay the bills. So a lot of people think, oh, my kids doesn't have to go to nursery school anymore. They're at home, so I'm going to stop paying the nursery school. The knock-on effect of that on other people and their incomes is enormous. And I think we all need to remember everybody is in the same boat at the same time. So where you can continue your bills, please continue your bills. But then this is also an opportunity. There's no transport costs. There's no eating out. There's no impulse shopping. All those things that we're spending our money on, we can't do them. We can't even do online shopping unless it's an essential item. So this is such an amazing opportunity to start putting money away. Take out a budget. Do your budget properly. Check your bank statements. Check your credit card statements. Find out what it is that you spend your money on. Draw up a budget. Start getting a handle on your finances. And then any disposable income you find yourself having in the next 3 weeks, use that to accelerate debt repayments, to make sure you have an emergency fund. Never ever has the word emergency fund been more important than what we're experiencing right now, because we don't know what's coming. If this goes on for another 6 months, not necessarily even lockdown, but just an economic fallout, what does that mean for your job and your future? So really now is the time to be trying to shore up your finances and give yourself some financial resilience.
Always giving us homework, but very important homework at this time. Thank you so much. Maya Fisher-French, of course, personal finance journalist and a guru, as it were, here at ENCA. Some really, really good advice for those perhaps wondering about what they should be doing with their own personal finance with what we are going through as a country.